Hello, everybody. Orlando here, and I hope you had a great trading week. And let's have a look at the markets that I trade. So I'm going to go through gold and the US dollar Japanese yen, which are the main two markets that I trade during the Tokyo session. But I'm also going to go through the S&P 500. So this is going to be a quite a quick video, right? About 10 minutes. 10, 15 minutes. And I'm going to go through the levels that I'm looking at. So first of all, let's have a look at gold. So gold is the gold chart on the 4-hour time frame. And the first level that I'm looking at here is the 3450, 3445 level, which is this level right here. So if you notice, when gold liquidated these highs, which were May highs, we had a 2,000 pip sell-off towards this lows. This is an amazing zone, right? I am not saying that you should be looking for buys here because we don't know what we don't know, right? We don't know what we don't know future price action. We don't know future auctions. So what we can do is look at the lower time frames and look at the levels that will invalidate such a strong down move. So this is the 4-hour chart, right? I'm looking at the 3272 level, which are these lows right here. Let's see if I can grab some rectangles. So this is the low that I'm looking at. On Friday, last Friday, right? During the New York session, gold liquidated those lows, as you can see here. So let's put on again and a rectangle. So this is the liquidation that I'm looking at. Let me just expand this so you can look at what I'm looking at. So that is the low on the 4-hour time frame that gold liquidated. And if you notice, we had a V-shaped recovery at the New York Open. Now, I was looking for possible longs on the New York session, but price remained trading in this range. So there was no setup for me, right, to go long. But this V-shaped recovery below the 3270 level will possibly bring long setups on at the open. So the level that I'm looking at for possible shifts is this one right here, the 3290 level. So this lows. As you notice, we are in an extreme bearish move. So let me just insert some arrows, maybe. No, that's fine. So we are in a very strong bearish move. So from this high to this low, we are in a bearish structure, as you can see here. Boom, all the way down here. Now, which is the level that I'm looking for gold to trade above so I can look for longs is this high right here. So I'm going to insert another rectangle here. Now, this is my key level. So should gold open higher, it doesn't have to open with a gap up, right? That doesn't need to happen. But if gold, at my Sunday open for you guys might be Monday's open, rallies above the 3290 to 3295 level, I will be looking for long positions right here. And my first target, of course, would be this lows, which would be a 33 10 level. So that would give me a nice 190 pip range to play longs throughout the first days of the week. Remember, I'm a day trader, so I don't take swing positions in the sense that I don't hold positions overnight. But anything below that below the 3291 or 3290 level, or this box right here, is a no trade for me. I won't be looking for shorts at all. I won't be looking for shorts, but I will definitely be looking for longs if gold trades above it. Now, that might not happen during the Asian Open, but I will pay attention to that. Also, If we go lower, let's go lower to the 5 minute chart because this is important for me. We have the New York high here. I'm going to delete this box and this box because we already know about those levels. But this is the New York high. Now, if you notice, we have a very, very, very strong zone right here with these lows and New York session rejecting those highs are the 32, let's call it 3282, 3285 level. So gold is trapped inside of a range. So what I need to see in order for me to execute longs in this market is for price at least to break above this high. Now, one of my setup, of course, is a liquidation of this level. But because of how strong this V-shape, let's call it a V-shaped recovery because it is. This V-shaped recovery is, I'm definitely looking for longs at the open. So if we go to the 4 hour chart, you can see that short positions or possible short trades are very, very tight in the sense that if I were to look for shorts, would have to I would have to see price liquidating the Friday New York session highs and creating some sort of a change in the structure of the market, which we have not because all throughout, after the New York Open and all throughout the New York session, you can see that price in gold ranged. So there is absolutely no setup for me, or there will be no setup for me to go short. And I know that that sounds a little bit counterintuitive in the sense that we are in such a strong bearish market, short term or mid term if you're looking at a day by day basis. But because of how rangy price is at the moment, the only execution that I'm looking at is possible longs above that 3280, let's call it 3280 or 82 to 85 level. And of course, all throughout above the 3290 level. So my possible positions or my possible execution would be only if gold rallies above the Friday's New York highs, retest that level, and then continues higher towards this previous low. So boxing, if we box this very nicely, we could in fact have a possible 250 pip range. Of course, this would not happen within a day, right? And I mean, and if this scenario plays out, I would definitely be looking for longs on a daily basis until this bias is no longer valid. So this is what I'm looking at on gold. If gold now second scenario, right? Gold opens lowers and breaks with the 34.54 level. So I'm going to show you right here. Let me just open up this chart. So if gold liquidates with this level, which is Friday's New York lows, right here, I will not be looking for shorts because the risk to reward ratio would be very tight. And just because I saw this V-shaped recovery, I would see an exhaustion on a bearish pressure. So that's my take on gold, right? That's my personal take on gold. Nothing that you have to follow, but this is what I am planning. And if and only if this plays out, I will be executing trades in this market. Now let's have a look at the US dollar Japanese yen. Now the US dollar Japanese yen on the 4 hour chart is very, very rangy. But this is a very, very high range, right? Very wide range. We're talking about a 600 and 670 pip range. So there's a lot of room for us to possibly make money. Now, on the 4-hour chart, this market doesn't look like much, but let's go ahead and move to the 1-hour chart. And on actually, let's go to the 15-minute chart. On the 15-minute chart, again, we are looking at a bearish bias, bearish trade in this market. Now, if you look closely at what has happened throughout the last 2 days of the week, yes, we had a very strong move to the downside for about 225 pips. And then price chopped, making higher highs and higher lows, but very choppy, right? For the last 2 days of the week. Now, if it looks like a flag and it smells like a flag, must be a flag, right? So just because, I mean, let's have a look at volume, right? Let's have a look at how price has behaved this week. Now, the start of the of last week was here at the New York highs on the 145.95 level, right? Very strong bearish move, very strong bearish move. Now, this chopping move to the upside on the last, I'm sorry, 2 days of the week does not show a ton of buying pressure. Absolutely not. Sellers are definitely in control of this market. And even if you're looking at this lows right here, let me grab again another rectangle. Now these were in very important lows, right? Now the first thing that you're taught when you come to trading is that when strong support as this one is broken to the downside, it should turn into a resistance, and that is not. I mean, that is correct, right? That is correct, but the exact execution on when to go short is not when price hits that level. You have to look at how price is behaving around that level, and if price has broken with the overall structure in this market. So if we go to the 1-hour chart, you can see that we are still very much in a bearish market from these highs. The next high that I'm looking at is this one right here, which is the one that saw sellers jump in during the last New York session. So again, very choppy. So the question remains: what is it that I'm looking at right here, or how would I execute a trade on the US dollar Japanese yen? Let's go to the 5-minute chart and let's have a look at only and only the past days of price action, and let's just delete everything else. So, yes, we're looking at higher highs and higher lows on the US dollar Japanese yen, but again, the move higher is super choppy. Yes, we're liquidating highs again and again. Let me show you what I'm looking at here. We're liquidating highs here. We're liquidating highs here again and again. But what happened, right? Later in the New York session, we did not liquidate the highest high. And when I say liquidate, it's just break, right? We did not break with force the last high. In fact, price printed lower highs, 3, 4, 5 lower highs. So levels, or what I'm looking at on the Japanese yen, is shorts, guys. I'm looking for shorts on the higher time frames. We have a ton of room for shorts towards these lows, which are, if I'm not mistaken, June lows, right? This month lows. And we have a ton of room towards these lows, around 170 pips of possible price action to the downside. So if we go back to the 5-minute chart, and if we look at what has happened on the last 2 days of price action in this market, we're printing higher highs and higher lows. Yes, on a very choppy structure. This by no means means this by no means means that buyers are in control. In fact, I'm looking at possible sales below the 144 50 level, which are these lows right here. Right, so I'm sorry, let me just grab again that rectangle. Should price break with these lows strongly, I would have a very, very good setup to go short on the US dollar Japanese yen. This means that I would be trading the upside on the Japanese yen, right? When I trade the US dollar Japanese yen, I'm focusing on trading Japanese yen, not the US dollar. So basically what I'm looking at is if for price to open lower. Doesn't I mean it doesn't have to open below this level. Just has to go break with this level with volume, right? With volatility, and then a pullback towards this level would give me an awesome risk to reward ratio to tap or to hunt these lows. So we're talking on a daily, on a day trade at about a 50 pip trade. But if we look at the hourly chart, right? If we look at the, let me just zoom out here. If we look at the hourly chart, if price breaks with these lows that I'm talking about, the structure, this choppy upside structure that we have seen throughout the week would be broken, and we could see a continuation of this massive down move. So the or what I'm looking at, or the only trade or the only execution that I'm looking at on the US dollar Japanese yen is a short below these levels. Why? Because yes, if price rejects these levels, let's imagine that price comes down here. Let me just thicken this um, thicken this. Right. So let's imagine that price comes down here, right? Liquidates this low or breaks with these lows and recovers to the upside. Now, why wouldn't I trade the upside on the US dollar Japanese yen? That is pretty simple because one, I would be trading against the overall trend, right? And I would be trading, if I were to take a long here, I would be trading inside of a very choppy and very unsecure, long position, in my opinion. So only shorts on the US dollar Japanese yen next week if we break with this low. Now, if the US dollar Japanese yen decides that it doesn't want to go lower, or US or Japanese yen buyers decides that they want to sell off, that would mean that the US dollar Japanese yen would break with these highs. Now, here I would look for possible longs, but because there is no structure for me to um, not front run, but there's no structure for me, to decide what to do in this possible scenario. I would not execute a long position. Only shorts on the US dollar Japanese yen for me this week. Now, finally, the US 500 or the S&P 500. Now, this was a very, very, very fun Friday session. So let me share with you what I did on Friday. So we have pre-market, yes, we have pre-market action here. So what I did pre-market, I shorted this market on the break of these lows. Let me show you. Again, here, I shorted this market on the break of these lows, very, very, very small position, and I took profits at these lows. Was just, an A plus setup on my model that I took pre-market, and I closed my positions because I do not front run the open or the open New York session. Now, at the open, I waited. Let me show you what I did because it's quite fun. At the open, I waited and I went long on the S&P 500 right here, right at the break of this high. So as you can see, I closed my positions at or when on my short positions pre-market when price hit these lows. And when the market opened, price liquidated these lows and recovered very, very fast here. So I took that pullback towards my shift area, and I got along, and I call it a day. Then a friend of mine that trades Elliott Wave told me, "Hey, are you seeing the market for the last hour of the market because it can dump?" I wasn't. I was down for the week. But what happened is that we saw a massive liquidation of all the lows here. More importantly, and let me show you, more importantly, Friday's Tokyo lows, these lows right here. Price liquidated these lows and recovered immediately and closed extremely bullish, right? So price sold off for about 50 pips. I don't know how to measure this in MT4. Sold off, liquidated Friday's Tokyo lows and then recovered and closed very bullish. Now, when I say closed very bullish, let me show you on the 4 hour on the daily chart. What do I mean by that? So, if you look at this, if you look at that daily candle on the S&P 500, right, liquidating the lows and then closing higher, that to me is very bullish. So what I am looking at on for the Open, not for the Asian Open, but most importantly for the New York Open, I'm looking for a rally, guys. I'm looking for a rally on the S&P 500. Let me just move this up here. So if we're looking at the Friday's New York highs, what I would love to see is two scenarios, right? Two scenarios. The first one would be a rally above the New York highs with volume, with volatility, and then I would probably look for longs, at the retest of that level. Now, sadly, not sadly, I think that we do not have levels to secure TPs because I think we are all-time highs. But anyways, that's the first scenario. Second scenario would be shorts, right? Now, hold on. Let me just delete this, and this. Now, where would I take, I'm sorry, shorts. Where would I take shorts? Now, a rally towards the New York highs or Friday's New York highs, right? Actually, price action should move considerably choppier in the sense that I would like to see not a volatile move to the upside, but somewhat of a bullish structure, right? Like this, uh, breaking with the New York highs and then immediately breaking with the previous lows. Now here, guys, and this is where I would look for shorts, possible shorts. Now, the reason is that this liquidation, I mean, if we don't get a volatile move breaking with the highs, and we get a structure or a choppy move to the upside, and then liquidating the highs and breaking with, Monday's structure, I would take shorts, most definitely targeting New York lows. That would give me a very nice possible risk to reward ratio of let's see of about and again I am assuming that this would be the high, but it would be a very nice, at least I wanted to risk to reward ratio short. But this I would handle with care in the sense that I wouldn't push full risk on this possible short position. And if we have a volatile move break above Friday's New York highs on the S&P 500, I would definitely not look for longs. That is not my jam. I mean, I do not in my model. I mean, I don't have a model to trade these kind of scenarios. So my only and only execution in the S&P 500 or US equities would be this scenario right here. So that's this is what I'm looking at for next week. I hope that helps and trade safe. And I wish you an amazing trading week.